financial planning, there's really different areas of financial planning for comprehensive financial planning. There's investment management, there's financial planning where you do retirement projections, and then the outer ring, which we call wealth management, which really deals with estate planning and taxation. One of the primary tools in estate planning is a Roth IRA, and a Roth IRA can give your estate incredible benefits for generational financial planning. A Roth IRA protects the investments against its two worst enemies, which are taxes and required distributions. Unlike an IRA, a traditional IRA, a Roth IRA is free of both of those constraints. So in a typical IRA, the minute you turn 70 and a half, you must start taking required distributions. And the greatest benefit of an IRA is tax-free growth, compounding with tax-free growth. So all of the growth simply compounds, and it's not being slowed down at all by the taxation that goes on. But with a traditional IRA, when you reach 70 and a half, the government wants its share of the money, and so you have to start taking required minimum distributions. With a Roth IRA, no such required minimum distributions are required. And so your investment can continually compound without any taxes. If you die and your wife inherits your wife or husband inherits your Roth IRA, they also do not need to take out any required minimum distributions. If both of you die and you leave the Roth IRA to your heirs, they will have to start taking out required minimum distributions, but they'll be minimal because you'll leave it to someone who's young, and their required minimum distributions will be based on their age, and they can have an income stream for life which is tax-free. Another benefit of the Roth IRA is that if you leave someone a traditional IRA, and you're over the estate planning limits, that traditional IRA you'll have to pay estate taxes on. They can be 40 or 50%. And then if you take 40 or 50% out of a traditional IRA to pay the taxes, well, that's a taxable event, taking it out. And so you have to take more out to pay the taxes, and a traditional IRA, 70% of it might go for taxes simply because it is never been taxed, and now it's subject to both an estate tax and an income tax. So if you had taken that traditional IRA and converted it to a Roth IRA, you would have paid the tax, and now a Roth IRA is like IRA concentrate. And because it's IRA concentrate, it's smaller. A lot of it slips under the estate planning limit, and then on the other side, it can get reconstituted with an income-free or a tax-free income for life going forward, and it can leave more to your heirs. So Roth IRAs make great estate planning tools. Like all things, a Roth IRA is not the answer to all of your estate planning needs, and that's why we recommend that you update your estate plan at least every 5 to 10 years.